Hello and welcome to this webinar on ESS Small Business. Help me run a better business. I'm Peter Towers, Managing Director of ESS Small Business and ESS BIZTOOls. I hope you're having a great day wherever you are around Australia. I cannot hang around much longer. This was the theme of a letter that a business operator sent to an accountant's website called Accountants Daily a couple of months ago. He said, "I've been waiting for you to escape the compliance cubicle." And he also indicated that tax does not light me up. Does this sound like you? Help me run a better business was his plea. And what this gentleman asked was for his accountant to agree to meet with him every quarter for a full and frank discussion on his business performance. And he asked if the accountant would agree to set the appointments 12 months in advance, lock them into the calendar. Do you want your accountant to help you run a better business? Do you want your accountant to perform something akin to a chief financial officer role, with you acting, wearing the hat of the CEO of your business and having a real partnership working like happens in larger businesses? That can be done. So let's go through it. So first of all, what sort of service would you like to be receiving from your accountant? And do you like the concept of having periodic meetings, either quarterly or monthly, so that you could discuss business improvement strategies at those meetings? Not taxation. You can still have one taxation meeting a year, but there's no value add in taxation services. So the first requirement I think you should be making is that financial accounts are being prepared that you can review every month, or at the very most quarterly, but preferably monthly, on an individual business unit. So if you have 3 or 4 different business activities within your overall business, wouldn't it be better if you received 3 or 4 separate trading accounts showing the income earned from that individual business unit, and then what the material costs and the labor costs and the labor on costs were, showing a gross profit, so that you can really evaluate how your business is performing rather than everything being thrown together in one profit and loss account? That's what is done for the taxation office, to give them your tax return. But you need management accounts, I suggest. And once you have your individual business units, you can then receive key performance indicators and then get benchmarking. That's where your individual business units are compared to a block of business units from the same sort of industry as you. So you can compare gross profit percentages, labor to turnover percentage, productivity percentages, to give you a better idea of how your team, your business is performing. And in each of these business units, I think you should be asking to allocate labor costs direct to those individual business units. Labor on costs are also very important. One of the key things that an accounting report should be giving you is matching the revenue you have earned in a particular period with what the costs of delivering that revenue were. Therefore, it's not fair that holiday pay is charged against 1 week, when in fact holiday pay accumulates over the full 52 weeks in a year. And therefore, all that you would be charging against that particular month's result is a percentage of the labour bill that allows those costs, like sick pay, holiday pay, statutory holiday pay, long service leave provision, to be allocated on a regular basis throughout the year, not just when the payment is made. You should be asking your accountant to give you an analysis of your customers. What sales are being made. For some of your customers, even calculating a gross profit percentage. So you can determine if you're really making any money out of particular customers, especially when you take into account the extra services that you may be providing particular customers. How's your communication going? What's the result of leaflets or newsletters that you have sent out, or your material you've included on your website, or your social media strategies, Facebook, LinkedIn, Twitter, and the others? What results has the business achieved? If your accountant is wearing a chief financial officer hat, this is what he or she would be doing within your business and reporting to you. Debtors analysis. How much is owing in debtors? What's the debtors' days analysis? What's the debtors' days outstanding? Who are the problem debtors? Is your team aware of the desirability of registering some of your customers on the Personal Property Securities Register? Perhaps all of your customers. And if so, is there a procedure in place? Because your new customers need to sign a terms of trade agreement and a retention of title agreement and send that back to you promptly so that you can proceed with the registration. And the deadlines for registration vary, but they're somewhere between 15 and 20 business days, depending on the circumstances. So there's not much room for error. What about an inventory analysis if you're running stock in your business? What's the investment in stock? How does it compare to budget? What's the stock turn been achieved on individual items or on departments? What are the obvious problem areas of stock? And what's been done about it? So the business needs a stock analysis. What are the star items? What are the cash stock items? You know, the items you need, but they don't really make much money for you. But what are the problem lines and what's being done about them? Your accountant should be able to analyze this for you. Now, are you planning to scale up your business? Scaling up is basically where you look at what you're currently doing, which might be $1.5 to $2 million a year in turnover, and you say we would like to achieve a $4 to $5 million turnover in 3 to 5 years' time. This is going to require a plan. You will need to have a leadership team in place. But you will need to have cash, because once you start scaling up, invariably a business needs more funds to finance debtors because more people will owe you money. And in many cases, you will have to hold larger investments in stock. So your investment in inventory will increase, and perhaps in work in progress if you are running a business that has work in progress. But you might also have to undertake some special research and development activities, which can cost a lot of money. And you might need some extra facilities, so an extra warehouse or production facility. So what's all that going to cost? Because scaling up definitely requires access to some more cash. So think about this so it can be discussed at your meeting. If you're asking your accountant to perform a chief financial officer review, he or she probably will also be involved in analysing what's happening with your team during the previous month or 3 months. How many new engagements have you got? How did the induction program go? What sort of feedback did you get from these new team members? How's the training going? First of all, of new team members, but also of your established team members. What new skills are they learning? Are they keeping up to date with what's happening in the marketplace? Or probably more importantly, is your team in front of what's happening in the marketplace? In other words, your competitors. What resignations have you had since the previous meeting? And were exit interviews conducted with those people? What did they have to say? Exit interviews are a great way of getting some feedback. It's probably the only time you will get people to give you a fully frank, from the heart type comment about your business. So your accountant could have coordinated that for you. What's the sales income per individual team member? If you got 10 sales members and your turnover's $200,000, $2 million, that's an average of $200,000. And what's the benchmark comparison for your business? If it's 300,000, I suggest you need to make some further reviews with your accountant to work out what can be done. But if the average is only 120,000 and you're achieving 200,000, I assume you're doing something right, but that might need a bit of investigation also to make sure everything's been recorded correctly. So what the whole purpose of this is to be able to ask some questions and then to analyze what's happening in your business. This is what big businesses and public companies do all the time. Why shouldn't you do it in a small business and medium-sized enterprises? The most common response is, well, we haven't got a full-time accountant, but you can have one these days. You can have a virtual chief financial officer type service. So let's look at business financing. How are you going? What's your relationship with your bank like? Are they able to supply the funds you need, or are you having problems with the bank? Or have you run out of assets you can offer as security? So should you be thinking about raising capital? You can do that now, you know. You could utilize crowdsourced funding equity raising. And in that way, a company can raise up to $5 million in a 12-month period from the public. And that's a private company can do that. You don't have to list on the stock exchange. You don't have to mortgage assets. You don't have to sign personal guarantees. And most definitely, you don't have to make monthly principal and interest repayments. But perhaps you could go through what is called a Section 708 capital raise. That's Section 708 of the Corporations Act, whereby a company can raise up to $2 million in 12 months from 20 investors. And that's a private company. So you could do that first. But if you needed more money, up to $5 million, you might use crowdsourced funding. And is your accountant talking to you about grants? You know, there are thousands of grants in Australia provided by the Australian government, the state and territory governments, and some local government organisations. Are you being made aware of those so you can think about them and then lodge an application for your business? Most government grants will contribute 50% of the cost of something. So you're getting a 50% discount. Another very important component of an accountant performing a broader range of services for you so you can have these quarterly or monthly review meetings is risks that apply to your business. Now, they could be things like your insurance covers. Have you evaluated them? If you got a cover for consequential loss of profits, have you sat down and analysed with your accountant as to what's actually covered and how much money you would get back in the event of a claim? Unfortunately, I found that a lot of people have never done that. And when they do so, they say, oh, geez, no, we need more key people retained than what we'd have the money to pay for them. That's because these policies have not been really evaluated. The Personal Property Securities Register. Ignorance of it can cause businesses to fail because a business can lose assets that haven't been registered on the government register. Now, I know it sounds a bit funny, strange, and I tend to agree, that you have to register your assets onto a government register to protect them in case someone you're doing business with who's got access to those assets or who owes you money has an insolvency event and a liquidator, a trustee in bankruptcy, or a receiver are appointed. But unfortunately, that's the law. Over $400 million has been lost by Australian businesses. Large, medium, and small businesses have all lost by being ignorant of this legislation. So ask your accountant to explain it to you and then determine whether you should be registering various aspects of your dealings with customers or with other business people who have your assets. Because if something happens to them, you can lose that asset. And what are the other particular risks affecting your type of business? And every business has got these. They should be noted down so that periodically you can consider those and saying to yourself, what should we be doing to reduce that risk, to minimize the risk, so that it's not going to wreck your business? These conversations need to be held. They are held regularly in larger businesses and in listed public companies. So why wouldn't you have those sort of conversations in your business? Just because you're a small business or a medium-sized enterprise doesn't say that these things don't apply. They do apply to you, and they can cause great havoc in your business. I was a chief financial officer and a company secretary of a listed public company some years ago. And the biggest ongoing demand on my time, the unplanned part of my day, was what I called the what if questions. And these normally originated from the CEO who had trouble sleeping and wake up around 3 a.m. and say, oh, Pete might know the answer to that. I'll give him a ring. The what if question. Do you have what if questions? I'm sure you must. It's not only CEOs of listed public companies that have them. So do you ask your accountant these questions that are causing you to lose sleep or to wake up at very early hours? So let's look at some of the what if questions. Why not ask your accountant, first of all, for a 12-month contract that would include preparation of monthly financial accounts on an individual business unit basis? Ask your accountant to include in his or her proposal that they are going to discuss with you and your immediate management team key performance indicators for each of your business units. And they are going to prepare benchmark comparisons for you so you can see how they're really going. And then you could have your business review meeting quarterly or monthly, but diarise it 12 months in advance. It'll tie you up, but it will also tie your accountant up. That this meeting is important because it's going to help you to run a better business. You will then have the opportunity to work through these questions. I think if you do have a what if type question and it wakes you up at 3 a.m., have a pad alongside your bed and write the question down and send it to your accountant in the morning, preferably. A bit later than 3 a.m. But I've had those calls. Your taxation review meeting, I think, then should only be held annually. You'll be asking your accountant to provide you with budgets for each of these operating businesses that you have. And you should have a cash flow forecast looking at your overall business. And the cash flow forecast should be updated and modified every month to reflect current activities. So will your accountant assist you in this task? I hope he or she will, but you know your accountant. Most accountants do want to supply added value to their services, but unfortunately, many of them get dragged down in preparing taxation returns. Tax returns are important, but they don't really contribute to improving your business, do they? They don't add value. I think you need to redefine the role that your accountant's preparing and say that you want them to help you run a better business. And some accountants don't realize that you might want them to provide a wider range of services because perhaps you've never actually had that conversation with them. You're waiting for them to volunteer. Well, you're the client. You're the one that's paying the bill. And incidentally, a broader range of services, I suspect, is going to cost you more money. But look on this as an investment in helping to add value to your business. So why not have that conversation with your accountant? I would like you to do the following. Ask them for the 12-month proposal to help you run a business. Tell your accountant you want them to perform a chief financial officer type service and report to you as if you were, and indeed you are, the chief executive of that business. Now, some businesses, small and medium sized, get advice on their business improvement strategies from someone other than the accountant that prepares their tax return. Because some accountants only want to specialize in taxation. And that's fair enough if that's what they want to do. But you need to know what services they can provide to you. So if your accountant says to you, no, I'm not able to supply you with a business improvement service built around a concept of a quarterly or monthly business improvement meeting, well, perhaps you should be talking to someone else to do that side of the work and let your current accountant continue with preparing the tax return, if that's what they want to do. And as long as you're happy with that arrangement. ESS Small Business can assist you on this journey to help you improve your business. We have a range of articles, some free, some for a fee, that are available on our website. Please go there and have a look. www.esssmallbusiness.com.au. Now, if you would like to talk to us about giving you a hands-on value-adding service, please contact us. And I'll be giving you our email address a little bit later. We're about to launch what we're calling our Spring Business Improvement Initiative. It's going to be a weekly Zoom group catch-up over 60 minutes of quality time investment from you. We're commencing this new product initiative in October, and it's going to run for 10 weeks. We'll be recording the presentations so you can go back and review things, or if you happen to miss the time slot, you could watch them at a time that's more convenient to you. 1 hour per week, investment in improving your business. It gives you the chance then to implement the business improvement strategies. We will spend an hour on basically the matters we have discussed in this overview discussion today. Take you through the details so that you get a far better appreciation of the key characteristics of running a better business. So if you have any questions, please send me an email, peter@essbiztools.com.au, or telephone me on 1-800-232-088. If you need more information, please visit our websites, www.esssmallbusiness.com.au, or for consulting services, www.towersbusiness.com.au. So why not make 2019 the start of a business improvement strategies for your business by joining us from the first week of October in our business improvement strategies weekly 1-hour Zoom meetings on a different subject for each of those 10 meetings. And we will have some guest presenters for some of those activities, some of those key business operations relative to small and medium-sized enterprises. Have a great day and good luck in your business during the rest of 2019. Have a great day. Goodbye.